Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are still heading up, but now you're starting to see a little bit of potential red flag as far as a reversal, or at least profit taking. The Dow has been moving up steadily, and we are going to be concentrating in the month of November on the T line, which becomes a highly effective trend indicator. And there's just a simple logic or a simple reality that as long as you're above the T line, it's assumed that you're in an uptrend. We're seeing that also in the Nasdaq. However, the Japanese rice traders have given us indications to tell us when to start looking for profit taking. Very simple logic. Where do most people buy? They buy exuberantly at the top. How can we tell when there's exuberance coming in? One, we can start seeing them gapping up in the overbought area. Two, you start moving away from the T line. This is just normal human nature, visual reaction for identifying when it's time to start being a little bit more defensive and making sure your safety stops are in place. So the benefit, again, that we're using when we use the T line is we can see how it confirms patterns. We can see which sectors we're seeing a lot of these strong patterns in, like the electric vehicles. And we know when there's big breakout moves, and we know when to be taking profits. We also know when it's time to get back into a trade because of the patterns. This is the classic pattern, a fry pan bottom followed by a J-hook pattern. The prerequisite for a J-hook pattern is a strong price move. The expectation coming out of a fry pan bottom is a strong price move. So you see the consolidation. Now we get ready for wave 3. We also can use the information built into a pattern to tell us when it's time to be buying based upon a fry pan bottom staying above the T line and what our next likely target will be. Now, that just doesn't tell us, well, it gets to a target, we don't have anything to do. The next logical step is we go to the 10-minute chart, because candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. The T-line rule is very simple. You stay long until you see a candlestick sell signal and a close below the T-line. However, we can augment our profit taking by saying, all right, it's hit a level that we know everybody else is watching in the overbought area. When you get to that setup where you're that far away from the T line on the daily, that's when you can go to your 10-minute chart and be ready to start taking profits once you see a sell signal and a close back below the T line. This process works very effectively, not because there's any magic formula. It's just that the Japanese rice traders over the last 400 years have illustrated when or what investor sentiment will do at excessive levels. Same scenario. We were buying this yesterday because of the big breakout move of your fry pan bottom. And then it was trading up here during the day. So how would we know to take profits up at this level? Well, number one, look how far away we are from the T line. So we simply go to our 10-minute chart. As long as the 10-minute chart stays above the T line, you stay long. This is where you start taking profits. There's your sell signal, and there's your trading back below the T line. Saved you a lot of not only profits, but keeping from going to a loss. This is not unusual. This is just how human nature works. So here's Candlestick Logic, NVIDIA. We could see when it was time to buy. There's your best friend breakout through the 50. There's your fry pan bottom. There's your breakout of the fry pan bottom, a gap up. How do we know when they're confirming the fry pan bottom? Usually very strong buying at that breakout level. But when is it time to take profits? Japanese rice traders logic. Where do most people buy? They buy exuberantly at the top. When it was up here, what could we visually see on our chart? Look how far away you are from the T line. What's your next step? You will go to your 10-minute chart and say, oh, should I be taking profits? Should I be taking profits? As long as you're staying above the T line. The T line rule is you close when you see a sell signal and a close back below the T line. That's where you would have been taking profits. This is just common sense logic using the graphics of investor sentiment in combination with the T line, which acts like a natural support and resistance level of human nature with Fibonacci type characteristics. That when you apply those two combinations together, you get an extremely high probability trading platform. We're going to be doing a 2-day training on November 13th and 14th. This is going to be where you're not learning formulas. You're not trying to figure out price moves. You're just identifying the candlestick signals and patterns and how to apply them with the T line so that you know when to enter a positive trade confirmed by the T line, maintaining that trade, and when to sell. Also, where to set logical stop losses and how to use all this combination to not only identify the trading setups, but also kind of revamping your investor perspective. As long as you've got confidence that prices do not move based upon fundamentals, that prices move based upon the perception of fundamentals, when you're using candlesticks and a combination with the T line, your whole perspective now changes to what is actually happening in the price, not what everybody or what you think is happening in that price. So right now, using the T line and that philosophy that the further you start moving away from the T line, especially in the overbought area, the more you want to start watching for profit-taking reversals. That'll be it. We'll see you in the chat rooms.